Over 70 million people have already downloaded an app that quietly paid them in cryptocurrency just for showing up every day. No mining rigs, no expensive hardware, just a tap on their phone. That project is Pi Network, and most people still have no idea how deep this rabbit hole goes. Today we're going to talk about Pi's origin story, the tokenomics, the real risks, and most importantly, the exact math on how many Pi tokens you need to retire as a millionaire in 3 simple scenarios. Now, let's get into it. This is not a financial advice, always do your own research. To understand where Pi is going, we have to look at where it started. Pi Network was launched on Pi Day, March 14th, 2019, by a team of Stanford graduates. At that time, Bitcoin and Ethereum had become too centralized and too expensive for the average person to mine or use for daily payments. Instead of the energy-intensive proof-of-work model used by Bitcoin, Pi went for the Stellar Consensus Protocol. This is a consensus mechanism that is user-friendly, incredibly fast, and creates transactions at nearly zero cost. And all of this is done from your phone. Security is built through the so-called security circles, which are networks of trust created by the users themselves. The vision is to build the world's most inclusive peer-to-peer economy and tutoring platform, fueled by the Pi token. The core team has been building slowly, prioritizing KYC verification and real-world utility over quick exchange listings. This slow cook approach has infuriated many, but it has also created a truly massive, verified user base. For years, Pi existed in a closed ecosystem, mined but not tradable. Then, on February 20th, 2025, everything changed. Pi Network dropped its firewall and launched its Open Mainnet, allowing real on-chain transfers and exchange listings for the very first time. Pi opened trading at $1.47 and surged to an all-time high of $2.99 within days. The dream was finally live, but it was never going to be a smooth sailing on the price chart. But we'll explore that in a minute. First, we need to understand the fundament and the tokenomics, which can make or break a project. Here's where it gets complicated and where you need to pay close attention. Pi has a maximum supply of 100 billion tokens. That's a big number, indeed. 65% is allocated for mining community rewards, 20% for the core team, and 10% for foundation reserves. Finally, 5% for liquidity purposes. Currently, around 9.7 billion Pi are in circulation, with a fully diluted valuation that assumes 100 billion tokens eventually entering the market. That supply ceiling is Pi's most controversial feature. For context, Bitcoin has 21 million cap with 20 million already mined. Solana has no supply ceiling, but the tokens in circulation are nearing 572 million. And the annual inflation rate is 3.95%, which will gradually come down to the bottom of 1.5% over the years. And then there's Pi's 100 billion max supply with under 10 billion mined currently. That's under 10% of the sum total. The way I see it, an extraordinary demand will be required to overcome that serious dilution pressure. What works in Pi's favor, though, is that most unmined tokens are tied to a declining issuance model that slows over time, and core team allocations track community rewards pace, which means they don't get paid early or disproportionately. Now let's talk about adoption, because this is where Pi's story gets interesting. As of February 2026, over 16.2 million users have migrated to Mainnet. 17.7 million are fully KYC verified, and the ecosystem now hosts over 300 mainnet apps. More than 100 of these were added in 2025 alone. Pi also ran the PiFest, a recurring global commerce event where real merchants accept Pi for real goods. The 2025, the latest edition, saw over 58,000 active sellers and participation from over 1.8 million pioneers engaged. What's more, a decentralized exchange is now being tested on the Pi testnet, which could unlock decentralized finance directly inside the Pi ecosystem. And there are over 421,000 nodes running with over 1 million CPUs contributing computing power to the system. The missing piece is, however, the bigger exchanges like Binance and Coinbase. As of early 2026, neither exchange has confirmed plans to list Pi. Now, let's address the risks. Risk number 1, the unlock bomb. Over 1.2 billion Pi tokens are scheduled to unlock throughout 2026. That's roughly a 14% increase in circulating supply, which will hit the market in a single year. More tokens flooding in while demand is still finding its footing is a recipe for sustained price suppression. So watch that unlock calendar closely. Risk number 2, centralization. The Pi Foundation controls over 90% of the total token supply. This is not a decentralized network yet. It's a centralized project with decentralization as a future goal. Risk number 3, the community is losing patience. When Pi Network published its 2026 goals, the response on X turned sharply negative. Users called out years of hype, delays, vague timelines, and zero accountability. That's their words. When your most loyal holders are this frustrated, it tells you something about the gap between promise and delivery. Risk number 4, your personal data. Pi requires full KYC, your real name, ID, and photo. The SEC has raised questions about Pi's centralized data storage and compliance model too. If that database is ever compromised or misused, the consequences go way beyond a price drop. You could face identity theft or have identity exploited in financial scams. That's a real-world risk you need to weigh before going all in. Pi does not seem to be a scam, but it is a project that has consistently overpromised and underdelivered on timelines. So if you're holding, hold with your eyes wide open. Now, the part you actually came for, the price moves that will bring you to that millionaire status. First, a bit of an overview of the history. On February 27th, 2025, Pi reached its all-time high of $2.99, which I know makes it sound like a Costco discount, but whatever. Fast forward a year, and we saw the all-time low of 13 cents in February 2026. Since then, the price started making higher highs and even tried to reclaim the 200 daily moving average. But it failed, and today Pi trades around 17 cents, roughly 94% below its peak. Now, using that 17 cents as our reference price, let's run the millionaire math. My long-term bear case is when Pi hits $3, simply revisiting its previous all-time high. That's over 17.5x from here. To reach the $1 million target at $3 a piece, you would need about 333,000 tokens. At today's price, that's about 56k upfront. In other words, significant capital, modest upside versus what's already been seen. For the base case, I've got $8 as a target, and it requires a few things. Pi executes on its roadmap. It gets Binance listing, DEX launch, a growing PiFest commerce, and deeper dApp ecosystem. That would be 47x from the current price though. 100,000 Pi tokens costing just over $21,000 will take you to $1 million one sunny day down the road. That's a curious risk-reward potential, if, of course, the ecosystem keeps building. But gentlemen, if I had your curiosity, now I'm about to grab your attention, because my bull case calls for $15. Pi becomes the payments layer for the mobile internet, the world's most downloaded crypto wallet by default, simply because it lives in the app most people already use. A massive 88x from here. Get 66,000 tokens today for about $11,300. Sit back and relax. The million should be on its way. To hit that $15 price though, Pi reaches mainstream consumer payment adoption at a scale rivaling Visa or Alipay. Aggressive, but not impossible if 70 million users become active spenders. For context, Alipay processes over 15 trillion in annual payments. Visa's market cap sits near 700 billion. If Pi captures even a fraction, a tiny fraction of mobile payment flows globally, the demand side of this equation looks very different. So, I may be optimistic on Pi, but you tell me now, is Pi Network the sleeper that onboards the next wave of crypto users through sheer accessibility? If you think yes, then drop your Pi price target in the comments below. But if not, then tell me, and the rest of the audience of course, what bothers you about the project and maybe I ought to reconsider my position. If this breakdown helped you think more clearly about Pi, hit the like button, subscribe to the channel, and share it with a friend who's looking for some hopium in these tough times for crypto. I'll see you in the next one, guys. Ciao.